This video reviews Chugai Pharmaceutical's financial results for the third quarter of fiscal year 2025, covering the period from January to September 2025. Chugai Pharmaceutical is the largest Japanese drug maker by market capitalization, exceeding 11 trillion yen. It is part of the Roche Group, gaining global support while remaining independently managed in Japan. Financial overview. Chugai reported steady growth in both domestic and overseas product sales, which led to increases in revenue and profit. Revenue rose 5% to 911.6 billion yen, supported by higher sales in Japan and continued strong exports to Roche in overseas markets. Operating profit also increased, and the operating margin remained high at 49.4%, reflecting efficient cost management and strong product performance. Net income grew 6.2%, and earnings per share also rose 6.2%. With steady progress across major financial indicators, the company stated that it is on track to meet its full-year forecast. The progress rate toward the annual net income forecast is 78%, which shows good progress. Top-line overview. Domestic sales exceeded year-on-year due to the increase in the sales of new products Phesgo and Piasky, and the mainstay products Vabysmo, Hemlibra, and Enspryng, despite the effects of national health insurance drug price revisions and the market penetration of generic drugs. Overseas sales increased year-on-year due to the significant increase in the export of Actemra to Roche. Short to medium-term outlook for major Chugai-originated projects. Chugai expects Hemlibra to continue growing globally, especially as its use expands in international markets. In contrast, Actemra sales are projected to decline over time due to the spread of biosimilars. Meanwhile, the company anticipates strong future growth from its out-licensed projects, which have high sales potential, particularly Nemluvio and Orforglipron, both showing favorable progress and market uptake. Overall, Chugai plans to drive growth in the short to medium term by relying on these new and partnered products as key revenue drivers. Strategic investment acceleration. Chugai is accelerating strategic investments to strengthen future growth. As part of this effort, the company acquired Renalys Pharma to obtain the drug sparsentan, a treatment for IgA nephropathy that has already been approved in the US and EU. Through this acquisition, Chugai aims to file for approval in Japan in 2026, positioning the drug as a first-in-class therapy and expanding its nephrology pipeline. The acquisition gives Chugai exclusive development and commercial rights for Japan, South Korea, and Taiwan. By adding sparsentan, the company seeks to support sustainable domestic sales, resolve drug lag issues in Japan, and deliver greater value to patients. Chugai's capital allocation focuses on innovative medicines, expanding its value creation engine, shareholder returns, and exploring strategic investments. Shareholder return policy. Chugai Pharmaceutical's basic policy is to provide stable dividends to shareholders while taking into account strategic investment needs and business outlook. The company aims for an average payout ratio of 45% of core EPS. In terms of recent results, the annual dividend for the fiscal year 2024 was 98 yen per share, with a core payout ratio of 40.6%. For the fiscal year 2025, the company plans a regular dividend of 100 yen per share, plus a 100th anniversary commemorative dividend of 150 yen, totaling 250 yen per share, which corresponds to a core payout ratio of 100%. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 6,935 yen as of October 24, and the US dollar stock price is $23.48 as of October 24. There was no significant change in the stock price after the earnings announcement. Current PBR is 6.4, PER is 29.46, dividend yield is 3.60%. Compared to past PBR, PER, and dividend yield, the current stock price is relatively high. Over the long term, the stock price has risen significantly. The dividend yield looks high, but without the 100th anniversary commemorative dividend, it would be 1.44%, which is lower than the past. Conclusion. Pharmaceutical earnings announcements can be hard to follow due to unfamiliar diseases and drugs, but Chugai Pharmaceutical is progressing smoothly in fiscal year 2025. Revenue and profit are growing steadily both domestically and internationally, supported by its affiliation with the Roche Group, which strengthens overseas sales. Strategic investments, including the acquisition of Renalys Pharma, are expanding its pipeline and driving innovative treatments. This year also features a 100th anniversary commemorative dividend, making the payout exceptionally high. Overall, Chugai is on track to meet its full-year forecast.